Hey guys, Theo Gogos with the Infinity Real Estate team here at Keller Williams Realty, Western New York. Just wanted to take a moment to go through my buyer's presentation with you guys. Typically, when I meet clients in person, this is something we go through together and have a conversation. I figure it'd be beneficial to give you a quick overview via video. That way, this can be something you can reference at any point in time. So, kind of jumping right in, as I mentioned, I'm Theodore Gogos with the Infinity Real Estate team here at Western New York. I am the team lead there. A little bit about me. We could get into this in more detail, but just to give you a brief overview, there's two major things that I like to point out to my clients when we were getting started. There are a couple things I've done to set myself apart from the average realtor. The one being did obtain my broker's license, so I am an associate broker. What does that mean? That means you can open up your own brokerage. You can go a couple different routes. It opens up more avenues, but for what it means for the consumer is I have that much more education than the average realtor. And I went through steps to actually obtain an extra license. Had to pass state exams, the whole 9 yards. So I'm huge on education. That was one thing I was really happy to, that I went through with because I learned a lot of different stuff that I didn't learn on my salesperson's course. So one thing I pride myself in. The second being, I am in the process of getting my home inspector certification. I don't plan to practice, get my license or practice home inspections. I did it more just to know more about what I'm talking about when I'm in a house, the components of the house. I mean, down from foundation to the mechanics, furnace, hot water, to just basic stuff. You know what I mean? Just knowing what I'm talking about when I'm talking about it. It's proven really, really valuable. I think my buyers have really appreciated it. This isn't to say, oh, go waive your home inspection or do anything like that. No, this is just more for us to have a better idea of the condition of the home at these initial showings. I think that's been huge. And another thing I pride myself in because there are very few realtors that are taking that course. It's very rigorous. And again, just something I'm really prideful of. Moving on here, I'm going to keep this brief. The Code of Ethics page, the reason it's in such small font is on purpose. It just shows you that as realtors, there are a ton of different I don't want to say laws, but laws we have to follow on our day to day, and there's tons of regulations. So just know that this is something I keep in mind, and I make sure to follow every single day. Some of my testimonials, a few reviews from over the years here, both with buyers and sellers. The client experience is huge to me, so to get these kind words at the end of a transaction is really important to me. I mean, it means the world, makes my day. That's exactly why I got into this industry. Some of the buyer representation documents, I do have another video that is explaining these in more detail. So I'm going to keep this very, very brief. And then if you have interest, I can send you that video. I should be able to put the link somewhere below. But at least for now, just to give you some brief overviews, there's two disclosures, one contract. So we'll start with buyer's agency disclosure. Again, not a contract. Pretty much is explaining who's representing who on a transaction. There's a buyer's agent and there's a seller's agent on any given transaction. So that puts into writing who's representing who. Am I representing you as the buyer? Am I representing you as the seller? There is a thing called dual agency when you represent both the buyer and the seller. I do try to avoid that just because I don't think it's you can't give the top level of service that you want to be able to give when you're representing both parties on a transaction. And regarding like the undivided loyalty, which is one of the fiduciary duties on the right side here, you can't give undivided loyalty when you represent both sides of a deal. That's the truth. So I try to avoid it. There are situations where it could be necessary or the best option to take. But ultimately, that's what the agency disclosure is: who's representing who on a given transaction. The buyer's agency compensation contract is putting in writing how we're getting paid for this fee for service, like how we're getting paid to represent either the buyer or the seller. So in this case, the buyer's agency compensation explains how the fee for service is taken care of when you're representing a buyer. One thing I like to mention, I mentioned it in my other video, but it's worth saying now, is for my buyer clients, 90 to 95% of the time, I'm able to get the full commission looped right into the deal, meaning as you guys as buyers do not have to pay anything out of pocket for professional services. So typically the sellers do offer some sort of commission to the buyer side. If they don't, there's a couple different avenues you can take in terms of, getting that looped into the deal. And I'm pretty good at doing that. I would say 90% of my deals, I'm able to get the full commission looped in. And why I do that is because you guys as buyers are going to have enough other things to worry about come closing time and enough other costs to worry about. So I try and make that much easier for my clients. The fair housing disclosure is just pretty much explaining that I'm not going to treat anybody different based on things like race, ethnicity, sex, military status, gender orientation. The list goes on and on. So that's another thing that we do have to have signed prior to getting into a house. And again, I mean, if you're, I hate to say it, if you're a good person and you're practicing these things every single day, shouldn't be any different. So that's just pretty much saying that I'm going to treat you the same way I would anybody else. Sometimes people ask, hey, why am I signing this compensation agreement? Well, I become your fiduciary once we sign that. And you get the following: obedience, loyalty, disclosure, confidentiality, accounting, reasonable skill, and care. Again, I do get into more detail in this in another video, but I'm happy to answer any questions or direct you towards that video if necessary. Understanding your team. This kind of explains that there's more than just your realtor that is on these transactions. Let's use a spider web as an example. So me as your agent is in the middle of this spider web. An attorney is going to web out one way, a lender is going to web out the other, an inspector is going to web out the other way. So while I am typically the center of everything, there are going to be certain situations where I tell you to reference the other people that are on your team, if you would. So if you have a legal question, I'm going to probably send you to the attorney that because I didn't pass the bar, so I want you to be able to get, you have an attorney on all these deals, so you might as well utilize them for any legal questions you have. Your lender, if you ask me a mortgage related question, while I might be able to answer it, I'm not your best avenue for that. So I'm going to refer you to the person that, that does it every single day and will be more hands on with that, which is typically your lender. And then your home inspector. I mean, we do a home inspection. You have a couple questions on the report. Best bet is going to be, to go right to the person that did the report. So I'm going to recommend that happen. So typically, I mean, I have great relationships with my attorneys, my lenders, and my inspectors on any of these deals. While we all are working hand in hand, and I'm typically the center of that stuff, there are certain avenues that you might want to reach out to certain people for. So we can always go through that as time goes by. Understanding your needs. This is basically, I asked, some questions about your situation. Why are you moving? Who's moving with you? Blah, blah, blah. We can get into that in more detail. I like this page because it kind of explains, what to expect when you reach out to that lender. They're going to want pay stubs, social security, driver's license. If you're getting gifts, we're going to need documentation that, hey, mom's willing to gift me $5,000 for the sale, that kind of stuff. So this is kind of just a basic overview of, what the bank's going to ask for, and they're going to ask for a lot. I mean, mortgages are definitely, tedious. Different types of mortgages. Again, your mortgage consultant can probably go through these in a little more detail, but keeping it very brief. Conventional is the most common type of loan, right behind that being FHA. Um, Biggest difference between these two being that this is private backed, this is government backed. Anything FHA and government backed is more strict between appraisals, and that kind of stuff, but it is easier to get pre approved for an FHA over conventional. FHA 203K is a rehab loan. Sounds a lot more appealing than it actually is in practice. If that's something you want to discuss further, let me know, but they are tough. I don't do a lot of those at all. USDA would be if you're buying, maybe a farm or something in the Amish country, something like that, typically for more rural areas. And VA, obviously, if you're, a veteran and part of the Veterans Affairs Association, that is an option as well. VA is very similar to FHA. It's government backed. So they're just a little, stricter on some of the requirements when buying the house itself. It's easier to get pre-approved through a VA or an FHA, but it's harder to get into certain homes. And again, that's something we can explain in more detail when the time comes there. This gives you just an idea of understanding closing costs. The reason I put this on here is just more for you guys to see, some of the where are these closing costs coming from. There's a lot of different stuff on there. I mean, my favorite on this one being the flood certification fee of $8. That is just part of buying a house. Unless you have the cash, you're going to pay some closing cost here. A good rule of thumb is, like you can see here, this is a 3% down payment. I like to say minimum 5% down, and you can have up to another 5% in closing costs. So on a $200,000 house, it would not hurt to have up to $20,000 to close, cash to close on that one. Just I like to aim high, and if it ends up being less, looks better as opposed to a lower number and it getting higher at that closing table. But again, this is something your lender can get into more detail with. I'd like to just put this in here so you guys understand some of the fees attached. Proceeding with caution. After you get pre-approved, don't go open that credit card. Don't go buy that new car. Don't go finance any furniture the week before closing. And you can actually lose a pre-approval over it. So you have to be very careful. The other thing on this page I like to bring up is closing dates are fluid. I compare it to a baby's due date. While that contract is going to have a certain date on it, you might close a little earlier. You might close a little bit later. You might close on the exact same day. It's possible, but don't go take off of work right after you get your offer accepted 2 months later, assuming that it's going to be right on that date, because the likelihood of you closing on the exact date of the contract is unlikely. It's a fluid date. Picture like a baby's due date. How to submit a strong offer. There's certain things we can get into more detail for here. Obviously, purchase price, increasing your earnest money deposit, which is something I can get into more detail in when that time comes. Financing, your type of financing does matter. Conventional is typically more beneficial to the sellers compared to an FHA, which is more beneficial for you, but not the sellers. Again, we can get into more detail there. Getting pre-approved is always the first step in the process. You want to know what you're pre-approved for, if you can get pre-approved, all that good stuff there. Escalation clause, we can get into in more detail. That's more contract specific, so I'm going to just glaze over that one for now. This goes and know what happens after your offer gets accepted. Again, I'm going to keep this very brief for now, just for the sake of time. We can explain anything in more detail. Offer accepted. The offer is not fully executed until you have both attorneys sign off. So on every deal, there is a buyer's realtor, there's a buyer's attorney and seller's attorney on any given transaction. So after you get an offer accepted, you send it out to your attorney. They'll talk to you about the contract, go through it with you, write a letter on your behalf, just pretty much saying, hey, we're ready to give. We're signing off on 123 Main Street. Best way to put it. Just a letter there from your attorneys. If there's a home inspection, that'll take place after the attorney approval. At least in Buffalo, what I'm seeing a lot of is, the market's been pretty hot. There are people waiving home inspections, so that's kind of a maybe if you get one or not. I don't make that decision. That's totally up to you guys as the consumer to make. After that is the earnest money deposit check. This is a good faith deposit, essentially, that you're putting down on the house. And it does come off your down payment. So say your down payment was $20,000, your earnest money is $10,000. Then when you go to close, it's actually only going to cost you $10,000, not the full $20,000. That $10,000 gets held in escrow, and then does come off closing costs. What it's there for is, in a sense, it protects the seller. It shows that you have a little skin in the game. If a month goes by and you waste a month of the seller's time and try and walk away without a valid contingency, you can be on the hook for that $10,000. There's a ton of different ways you can get it back. If the seller walks away, you're going to get your deposit back. If your financing falls apart, you're going to get your deposit back. If you lose your job, you're going to get your deposit back. If, say, your co-signer passes away and you can't approve anymore, you're going to get your deposit back. So there's a ton of different ways to get it. The rule of thumb is you get your earnest money back with any valid contingency. So like contingencies are the home inspection, you can walk away. If financing does fall apart, financing is a contingency, you can walk away. That's another option as well. So earnest money deposit is something I can get into more detail for down the road. Obviously, applying for a mortgage, I should probably be closer to step number one. After you're pre-approved, after some time, we will go for the appraisal. So the appraisal is a big step in the process. A lot of times I'm seeing that, they do appraise where they should be at value. If they don't, we can, in another video, describe a couple different options we have there. But let's, for time's sake here, assume that the appraisal does go well. Typically, once that's done and you have given everything to the bank that you needed to, we'll get a mortgage commitment. That's pretty much saying, so when you get a pre-approval, it's the mortgage consultant saying, hey, we're ready to pre-approve Susie. But the mortgage commitment is the entire bank saying, no, we're signing off on this. We're good for the money. We're ready to give it to you. So that's a big step in the process as well. And then after you get that, you get two different cleared to closes. One comes from the attorneys, just pretty much saying all the work on their end is done. And then the other clear to close is from your lender, just pretty much saying, hey, the buyer's given us everything we need. We're ready to rock and roll. Once you get both cleared to closes, you will schedule a closing date, typically about a week out from when both clear to closes happen. And then typically a day or two before closing, we go for a final walkthrough. This is pretty much just to make sure that the house is in the condition we bought it in. If we walk in and the roof's caved in, obviously we have an issue. More commonly, what happens is, something silly little stuff. Like if the furnace is off and we can't check the heat, we're going to have an issue. You're just double checking everything. This is not a home inspection. This is more like a showing, just to make sure that, the house is in the shape you bought it in. Because a lot of times you see the house once and you don't see it again for another 2 months on these transactions. So that's what we're doing, protecting ourselves, giving us one more look at the property before closing. As of closing, you do have to transfer utilities into your name. So I do have a little cheat sheet here with some of these numbers. I likely have them on my phone as well if you ever needed them there. So gas, electrical, water are the common ones. Sometimes garbage just need to be changed out. If you have septic, wells, those are different conversations to be had. So just things to consider. And some additional notes again here. I have transfer utilities into your name. You'll need to get homeowners insurance by closing. That's another thing. Typically, your lender will talk you through that too as well. And then what I just mentioned here with the final walkthrough. So that is kind of, from the initial conversation to the closing table, what to expect. While I'm on the topic of closing, closing is typically at one of the attorney's offices. It's about 45 minutes of you just signing some paperwork. And then once you're done there, you own the house and you get the keys. So awesome feeling there, of course. But that is basically the rundown from initial buyer consult to getting to the closing table. And of course, if there are ever any additional questions, let me know. I'm happy to go through that in a little bit more detail for you. Hope this was helpful. I'll talk to you guys soon. Take care.